Hello everybody, welcome to the channel. So for anyone new today, this is going to be my Wealthsimple portfolio that I started back earlier in 2021, and I'm just going to be talking over the progress that I've made so far. So the markets recovered a little bit today. September was pretty much down month all month, and you can see today that we were up 1% today, down 2% in the last week. For the month we're down 2%. Last 3 months we're up 2% overall, and in the last year we're up 8% in total. So please like, comment, and subscribe just so you can follow my journey. And here's a spreadsheet I made just to follow my overall portfolio breakdown, the number of shares, my yield on cost, the annual dividends that it's producing for me, and the weighting in my portfolio. So I purchased more Apple today. We just did a fractional buy. Just got another about 4% of a share, just increasing our stake of Apple just because it went down to, I think, what is a fair valuation around the $140 mark. It's trading at around 25 times its annual earnings and 20 times its free cash flow. So I think that it's a pretty fair price, and I decided to get a little bit more of it. The biggest addition would be one more share of Intel. We started this position last month just because I like the direction the company's heading with the new chip fabrications, and the CEO is also mentioning how they're going to be targeting AMD. They're going to try to be the best market leader in every single segment that they compete in. So those are bold statements from the CEO, but I definitely think him being the former CEO of VMware and him talking about just integrating silicon, so the chips that they make, with the software and integrating them to work as well as possible. It just sounds like something that could play into Intel's favor, and that's definitely something that kind of sounds, in a sense, kind of like Apple, like bridging the gap between hardware and software, so it's more efficient, and it's possible that people will just prefer and seek out Intel over competitors if their compatibility is just better overall across the board. And we got one more share of Smart Centers. So this is a REIT. So I got it one more share just because it dropped under $30, and we got a pretty good dividend yield on it. So a bit over 6%. And the last position we updated today was one more share of Dividend 15, so DFN. So this one just pays us a really, really high dividend. It uses leverage, covered calls. So we got one more share to just increase the income that the portfolio is producing. And just an update on the dividends earned and dividend growth of the portfolio. I've earned $149.60 so far in dividends. Our annual dividends that I receive each year is $413.49. Monthly comes out to $34.46. Weekly, we're earning $7.95, and on the daily, we're earning $1.13 every single day. So we are just continuing to push forward and try to hit $2 a day in our portfolio. It's just good to have these little goals just to push yourself forward and keep yourself regularly depositing, because it's going to be, especially when you're beginning to invest, you're not really seeing your portfolio do much for you in the way of dividends or in the way of capital appreciation, just because, if you're starting with a small amount, it's not going to be very significant. So it's definitely good to track all these stats and just see your dividends increase over time. So as you can see from the dividend growth, we earned nothing in February, absolutely nothing passive income. And then June is our best month at $34.33. A couple down months just because a lot of things pay quarterly, not every month. And then in September, we hit $29.92. Now, I believe October should exceed June, since a lot of our dividend payers are going to be paying this month. So we're going to be getting a dividend from, we already received one from TELUS so far, so that's that $3.16 for October. We're going to be receiving it as well for Algonquin Power and Utilities. We're going to be receiving it from the Canadian banks. And of course, we're going to be receiving it from all my REITs and all my monthly income funds, which just help give me a bit more fuel to just buy more shares, keep compounding our dividend payments over time. And the markets have been down lately pretty much all of last month. especially towards the tail end of it. So we've updated our watch list a little bit. So we have Microsoft here. So this was actually as low as 280. I was really considering getting some, but I saw the other holdings that I wanted went down in value. And I still think Microsoft is a little bit hefty in terms of valuation. I just think it's still a pricey stock, so it might be a little bit risky to get it right now. It's definitely a company I'd want to long-term hold, but I don't want to overpay for it. That's definitely not a good thing. You can definitely overpay for a quality business. And no matter how good a business is, overpaying for it, I think by a large margin or like multiples, like maybe twice or three times what it's worth, can really hurt your returns over time. I feel the same way about Shopify. Their current valuation is just absolutely ridiculous, but they have a lot of growth potential because this is just a way for you to set up an online shop for yourself. So a lot of people, started businesses in the pandemic. They don't know how to run an e-commerce website, and this website and this service essentially just makes it so easy for you that anybody can do it. It's very simple. You pay a monthly subscription to them, so I like the revenue that they make is going to be consistent. You pay it every single month. So this is definitely one I'm going to be watching. If it goes underneath 1,500, I'll definitely take a look at it. Definitely start maybe buying this fractionally. That's a great part about Wealthsimple Trade is that you can buy shares fractionally. So even if you don't have a lot of money to invest, you can still participate in companies that you believe are at good valuations, or you feel like their growth potential isn't fully priced into the stock and you're more optimistic about the stock than the general market. So there can definitely be some price discrepancy if you find something like that. And the main thing for the last month is I was just enjoying buying all my favorite stocks at lower prices. So definitely don't be scared of the market going down. The market going down when you're a dividend growth investor is the fact that you're getting more shares, you're getting a higher dividend yield, and that only helps you over time. Your return is going to be higher. So the less you pay today, the better off you'll be 10, 20, 30 years from now as your money just compounds and grows, pays you more interest, and you reinvest that interest into more companies. All right, and if you haven't already, you can feel free to join Wealthsimple. The link is in the description below, and if you join, you'll get the value of 2 free stocks. So I actually did that myself recently. So somebody signed up using my referral link, so thank you very much to that person. And I got about $30, so not too much. You can get about between $500 and $4,500 value per stock. So each stock can give you between $500 and $4,500. So basically free money. You just have to sign up with the link in the description. You deposit $1 into a personal account, and Wealthsimple will just give you the value of 2 free stocks. So you can get a really good start to a portfolio just putting in $1. You don't even have to invest in anything or risk it at all. But it's probably a good idea to invest on a regular basis anyway. We're just dollar cost averaging here, and that's going to be the strategy I'm going to pick going forward. We're just buy and hold investors. We purchase good companies, quality companies, and we hold them for the long term and dollar cost average. Regardless of where the price is, if it's up, if it's down, as long as the valuations are, reasonable and they're not offensive, we'll continue to buy them. All right, don't forget to like, comment, and subscribe, and have a great day.